Money Talks. My name is Michael Campbell. Money Talks is brought to you by Solera Club. Solera Club is a royalty-based investment, which means as an investor, you're first in line to get paid. It is also in the tech sector, and there are no fees attached to it. For more information, go to soleraclub.com. I'm going to start today with two political quotes and then an explanation that leads to what I don't think anyone in the commentariat shows any sign of understanding. Excuse me. The first quote, and my favorite because it sums up my sentiments to a T, was Gary Johnson, the presidential candidate for the Libertarian Party in the U.S., was asked during his appearance on The View whether he'd vote Clinton or Trump if someone had a gun to his head. He replied, "I'd let the gun go off." The second quote is representative of the mainstream media, and I know that's a generalization, but I think the evidence supports it. It was made by New York Magazine writer Jonathan Chait, who said this week, in quotes, "The average undecided voter is getting snippets of news from television personalities like Matt Lauer, who are failing to convey the fact that the election pits a normal politician with normal political failings against an ignorant, bigoted, pathologically dishonest authoritarian," end of quote. Now, I'll come back to that in a moment, but first a reminder as to why I look at politics. And to be blunt, there's no reason not to understand this, but clearly people who have had their heads or their brains infected by the political virus have a great deal of difficulty. Nevertheless, it's pivotal to understanding major investment trends from the loonies value to real estate to stocks, of course. I mean, the capital flows that move investments in currencies are driven by confidence, primarily in government. Last year, $1.3 trillion moved out of Russia, $1.2 trillion out of China. Now, I think most of us understand, for example, that money moving out of China has been a major mover of high-end real estate in Vancouver, Toronto, New York, Melbourne, and Sydney. Russia has been a big player in London and New York. And the biggest player, though, on the world stage is the U.S. That's why I'm focusing on it. It has the biggest capital flows in both directions. And what we're seeing in this election is unprecedented and will be a pivotal catalyst for the financial and social chaos that's to come. At the World Outlook Conference with Martin Armstrong, on this show, I've been unequivocal that the next 4 years are going to make the extreme volatility, the social and economic dislocation of the last 7 years look like the good old days. With that said, let me come back to New York Magazine writer John Chait's statement that, in quote, "The election pits a normal politician with normal political failings against an ignorant, bigoted, pathologically dishonest authoritarian." My reading is that this represents the commentariat's prevailing view. They are on the side that says that Hillary Clinton's unethical behavior, outright lying, what I would characterize as the worst in the political establishment, is better than the bombastic, ill-conceived, passing acquaintance with the truth that Donald Trump displays. That focus completely misses the big picture. It makes no difference. Here's the point. It makes no difference if you think, as friends of mine do, that Donald Trump couldn't be worse with what's going on now, or as other people I know think that anything would be better than Donald. What the commentariat seems oblivious to is that the choice marks a key point in the demise of confidence in government. Each candidate is profoundly polarizing. Whoever wins their presidency is going to start with the highest disapproval rating in history, somewhere around 60%. They will preside over the next leg of the entitlement crisis that's already claimed Detroit and Stockton, Puerto Rico, and Chicago. At some point, we'll stop ignoring this. But I can't emphasize enough that the entitlement crisis is going to be pivotal. When I first read Mr. Chait's quote on Hillary Clinton, that she's a normal politician with normal political failings, I thought if she's the norm, then the system deserves to unravel. But it's more than that. The commentariat seemed completely out of touch with the suffering and hardship that so many are experiencing. I've mentioned this a lot of other times in conjunction with our own debate over oil and pipelines. Not once have I ever heard the leaders of the anti-pipeline, anti-oil movement mention the massive job losses and dislocation for certain communities. It's not even acknowledged. And this kind of elitism that fuels the discontent, I mean, that is what it is. It's the bottom line elitism that fuels the discontent. As well-known New York Times columnist David Brooks said, Trump voters are a coalition of the dispossessed. They've suffered job losses, lost wages, lost dreams. The American system is not working for them, so naturally they're looking for something else. Moreover, many in the media, and especially me, did not understand just how they would express their alienation. We expected Trump to fizzle because we're not socially intermingled with his supporters and did not listen carefully enough. I think that's a beautiful summation of the Canadian mainstream media and also in the States. Mr. Brooks got the message, but I see little evidence that the vast majority of the commentariat or the political establishment has. They didn't understand the Brexit vote. They didn't see it coming. They seem oblivious of what's happened in Greece with the election of the then newly formed Syriza party. No thoughts on the upcoming election in Austria, where the anti-EU party will win. The defeat of Angela Merkel's party in regional elections in Germany last week. No thoughts on any of that stuff. The question is, who or what comes next? It's the key political economic question in the next decade. And the election of Hillary Clinton, the ultimate establishment candidate, elitist, Wall Street candidate, as Bertie Saunders said, is going to exacerbate the trend. The backlash against the political elites has begun, and the trend is going to be propelled by a litany of broken promises by the welfare state, starting with unfunded public sector pensions, compounded by major debt problems. That's the big picture to understand, not what your political favorite is. Money Talks is brought to you by Solera Club. You can find more on Solera Club by going to soleraclub.com. Coming up, I got Michael Levy, the biggest fine ever. The biggest fine ever when you look at the Consumer Protection Bureau. He'll tell you what that's all about when we come back. Plus, I got a big fat idea for you. And Jim Dines, a legend. He's with me today, an extended, unique interview with Jim Dines. All of that on the Money Talks Network. Coming up, I've got the great Jim Dines with me, but right now I got to grab Michael Levy. I got a couple of questions for him on this one. $100 million fine from the Consumer Protection Bureau, biggest in history. Can you tell me what that's all about?
Well, Mike, Wells Fargo Bank really got their foot in it this time. 5,300 Wells Fargo employees were fired for setting up, now catch the number, 1.5 to 2 million fake accounts. They issued 565,000 credit cards that were not ordered by their clients and without any customer consent. And this was to meet or beat the sales goals that Wells Fargo put out there, the management of Wells Fargo put out there in order to grow their business. Mike, it wasn't just a $100 million penalty from the Consumer Protection Bureau, but $185 million overall, and that doesn't include what they had to pay the Office of the Comptroller of Currency. That's another $35 million, and $50 million to the city and county of Los Angeles. Do you think the accounts were worth it, Mike?
Yeah, I was going to say, that could have been my shocking stat. 1.5 million fake accounts, 565,000 credit cards without customer consent. Oh, my goodness. But you said, Mike, I just want to catch the number right. You said 5,300 Wells Fargo employees were fired over this one?
Yeah, they were fired, Mike, because they decided that if the managers are saying we want growth and we don't care how you get there, well, I guess they didn't really mean that they should go out and open fake accounts. And people started to notice that their accounts were being charged small amounts. They were being charged service fees, which is, by the way, one of the things that banks live on are those service fees. And people started to complain and push back. And boy, this thing just exploded at Wells Fargo. And Mike, what I'm concerned about, looking at this, is this a one-off? Is this just Wells Fargo? Yeah. Or, I mean, in Canada, much different regulations, I've got to say, but in the U.S., I wonder who else is sitting there wondering, are we next?
Well, I can tell you, it was a bad week for the financial services business, because I caught a story about MasterCard, having a few problems themselves.
Well, yeah, what they were charged with in Britain, Mike, and this is unbelievable, they were charging unlawfully high fees to stores where shoppers use their debit or credit cards. So let me just set this up. You go into a store and you charge something or use your debit card. Well, the store is going to pay a fee to the issuing card, whether it be MasterCard, Visa, American Express, Discovery, whatever it is. Well, MasterCard in Britain, according to these charges, these alleged charges, they charged unlawfully high fees to stores when shoppers used their debit or credit cards, and these fees were passed on to consumers by the way of higher prices. Mike, between 1992 and 2008, and the lawsuit comes from the European Union's antitrust regulator. And I've got to say, Mike, that this is just huge. The $25 billion equivalent damage claim. That's what's being claimed of MasterCard, and every person who used a MasterCard between the years 1992 and 2008 is included in it. They don't have to opt in. They don't have to pay any fees in order or legal fees. They're in on it. The only thing you can do is opt out, but they're really going after MasterCard.
Yeah, the size is mind-blowing, though. $25 billion equivalent damage claim. You know, and how many people did this affect, are they saying? Because, I mean, as you say, they don't have to opt in. So that creates a huge pool of people who could collect damages. And how many are we talking about? 46 million people in Britain between those years, Mike. And it's any person who had a MasterCard. And, you know, this is, here's the number, I think. It's a small number, but listen to this. If they can prove it, if this amount is the amount assessed, then the 46 million people are going to get a Canadian equivalent of $520 each. Just think about that. $520 each. And Mike, what gets me on this one too, like the Wells Fargo, is if this is going on and MasterCard's been charged in the UK, it brings the question, what other countries is this going on with? What other credit cards is this going on with? But MasterCard right now, though they are denying everything, and I've got to say that, and this will go to court in 2018, I think they've been caught with stuff on their shoes. I'm not going to tell you what. Well, it sounds like I'm about to have, and you're about to have a much better weekend than they are. Mike, thanks for taking the time.
Okay, Mike. Talk to you later.
We'll talk to you later. Jim Dine's coming up. We'll be listening to that one. I got Craig Burrows on deck, so he's president of TriView Capital. He's got a big fat idea for us, and I'll get to that in just a moment on the Money Talks Network. Jim Dyson coming up. Really looking forward to that. So much to chat about. Last time I was here, he made people, if you follow his advice, a lot of money in the gold stocks. I'll find out what's on his mind these days. But right now, very pleased to welcome back to the show Craig Burrows. He's president of TriView Capital. It's time for the big fat idea. Craig, I appreciate you taking time this weekend. What's the specific idea we're talking about?
Well, Mike, you know from the queries you get at Money Talks that the search for a yield is still a big priority for investors. And we're working with your editorial team this fall on a series called 8 Ways to 8%. And our first big idea is to invest in a fund called Equicapita. And they acquire established, private, small, medium-sized businesses, primarily in Western Canada. And these companies have a history of generating sustainable cash flow, improvement management teams, and can provide 8% returns to investors based on company profits.
Let's talk a little bit more. Give me the name one more time.
Equicapita.
Okay, and is it like a mutual fund then, or?
No, they're a private company that actually buys private companies.
Okay, and okay, so let's go a little further with that then. Well, first of all, how do you buy them then? I mean, if it's not traded on the stock exchange, kind of.
So it's a private equity investment, also known as the exempt market. So you can open an account with an exempt market dealer for as little as $5,000, and you can also use RSP money. Now, the easiest way we'd recommend is you just go to TriViewCapital.com, as we have agents across Western Canada and every major city here in Western Canada. But that's the easiest way. So even though it's private, you can still buy it through a registered agent across Western Canada.
Okay, so these guys then, they have a pool of capital. They go out and they look for small to mid-sized businesses to invest in or to own outright, I guess.
Correct. And the reason being is that, according to CIBC, one of the greatest wealth transfers is happening as we speak. Millions of baby boomers are finding ways to sell their companies because their kids don't want their business anymore. So there's a huge opportunity right now to buy these cash-flowing businesses that are too small for publicly traded companies, but great opportunities for private investment.
And it's funny, it's sort of like the mini version of what pension funds are doing right now, looking for return. I mean, they've gone into the private equity market because, right now the 10-year bonds don't yield anything kind of thing. And obviously we know that personally from our savings accounts. And so they are looking, as you say, I think you're absolutely right, that people are searching for yield this way. Yeah, and a lot of private businesses, or public businesses too, but a lot of private businesses, certainly have that kind of cash flow going on. So if you buy this and it's a private equity deal, Is there sort of like a dividend approach to it, or is there some sort of cash flow coming out of it, or is it a capital gains kind of deal?
It depends on the company. For example, Equicapita, it is an 8% yield, but then it has also back an equity kicker at the end as well. So, I mean, a little more I can say in 30 seconds. But generally, these deals we recommend for registered funds. That way, the interest comes in. Obviously, it's deferred tax. But we do have opportunities that do provide dividends, which would have a different tax structure. Or we have an LP agreements that would be more of a capital gain situation. But this right now, we're just finding yield, cash flow for people that are looking for money for to put money into their account and tired of the volatility of the markets or low-performing GICs.
Yeah, it's interesting. I mean, you started out by saying this, Craig, but I just reiterated that it's absolutely the case that this record low yield environment is really forcing investors to look all sorts of different places. And, because obviously for a great many people, receiving 1% on their money isn't going to get it done if they're saving for retirement. Certainly isn't getting it done for the major pension funds. They need to make a lot more than that. Well, how long should someone think about holding one of these?
So realistically, there's always the good news and bad news, the double-edged sword of liquidity. That's with the issue when you have private equity. Most private equity deals need time for the entrepreneur to put the money to work. And business plans usually take 3 to 5 years to execute. So that's why this product is great for people looking for a strong yield product for the registered and fund investments that they can wait 3 to 5 years. We do have opportunities that can get out after 1 year, but generally speaking, if you're looking at private alternative investments, the entrepreneur needs 3 to 5 years to make sure that money goes to work to get the returns you're looking for.
And one more time, the name that we're dealing with here, that just one of the samples. You weren't saying that was the be-all, the end-all, but that's Equicapita?
Yeah.
Equicapita?
Yeah, Equi as in equity, EQUI, Capita, CAPITA. And if you want to learn more, you can just go to our website, tribecapital.com. We'll tell you all about it.
Great stuff, Craig. Appreciate you finding time this weekend for us.
Have a great weekend.
Great. And we will have a great weekend because Jim Dines is going to be coming up with me very shortly here. We're going to have an extended interview. I think I'm the only person he will do an interview with in the country. And that's to your great benefit. Last time Jim was on, we were talking about, I remember him telling us that he didn't think the Federal Reserve could raise rates. He was very, I wouldn't say lukewarm. He was absolutely out of the market at that point. He felt you had to be in certain groups to be able to be successful within the stock market. So he's in certain groups. So we'll talk to him about that because he recommended gold stocks last time he was on the air. And, of course, those have done spectacularly well. I'll get the load on him. He was the other guy, though. We have Mark Leibovitz. We have Jim Dines, the two guys who were talking about pot as marijuana as an opportunity. And we'll chat with him, get an update on that field also. In the meantime, just remember, I hope you join us at Michael Campbell's Facebook. So we can talk, Michael Campbell's Money Talks on Facebook, so we can give you updates on a regular basis. We post every day there. You can go to moneytalks.net, hear some fantastic articles over the last week. Again, we post several articles every single day. You can hear the daily business comment there. So all of that on moneytalks.net. And Money Talks tweet also. Join us on all of those things. I'll take a break. I'll come back, though, and Jim Dines is going to be my guest.